Hello and welcome to today's edition of Charting the Markets. With me, Sean Murison, Senior Market Analyst at IG South Africa. On today's economic calendar, we do have that all-important ECB refinancing rate announcement, and it's followed by a monetary policy statement. We are still expecting 50 basis points increase in lending rates there, although there is an outside probability that we could see a smaller rate hike or even a pause in rate hikes, and that's in lieu of the recent banking concerns stemming from the Credit Suisse debacle. Looking at some charts and starting off with the currencies in the US dollar basket, we can see that the longer term trend for the dollar basket is still down. We've been marking with this high at 105.30. We did slightly breach that before collapsing again, and we are still trading below that 200-day simple moving average. So that longer term trend is still considered down. In the short term, however, we are seeing a bit of a rebound starting to form from oversold territory. And we can see that stochastic has just moved out of oversold territory as well. So we're watching this rebound, see how far it will take us, but keeping it biased still to the short side, and watching both the price relative to this horizontal 105.30 mark, as well as this blue line on our chart, the 200-day simple moving average. So our preference here is to look for any type of bearish reversal before these levels for short entry. Although if we don't get that and we see a break above those levels, then we'd be waiting for that strength to play out, first bit of weakness, and then we could consider long entries and long trades on the dollar basket or the dollar index from that point. But as it stands right now, the bias is still to the downside despite the suggestion that we are in a rebound from oversold territory. The euro dollar, we're seeing that this level of support here, 1.0513, is still holding. We are in a longer term uptrend, although the short to medium term, we are in a consolidation. Now, somewhere between 1.0480 and 1.0513, we are seeing as a sort of a key level of support right now, because this could be a bit of a head and shoulders formation at the top of our chart, just above that, what we would refer to as a neckline. So if we start breaking below, and let's use the lower level of support there, 1.0480, then we could say, well, maybe there's more of a reversal of trend starting to happen right now. But while that level still holds, and while we are still firmly above the 200-day simple moving average, we are still looking to keep a long bias to trades for the time being, but watching those levels closely. We have had a rebound off of this 1.0513 level. We are, though, trading very tentatively today. So before looking for long entry, we'd like to see a much stronger close above the halfway mark of this big red candle before we could start targeting and move back to about 1.0756 and towards 1.0800. Cable, similar picture in the fact that we are still, and we have been testing this 200-day simple moving average, but we are whipsawing through that 20 and 50-day simple moving averages, the red and green lines on our chart, suggestion of a consolidation in the short to medium term. We did have a bit of that falling wedge type formation drawn there, which is a slightly, in the context, bullish signal. We have had now a break above that. So a long bias is still considered here. And we are targeting a move back to about 1.2205. And if we can get through that, 1.2258. Now, traders who are long might need to use some discretion as where they could put a stop loss for that, perhaps somewhere a little bit lower there. Probably about 1.1945 odd. Moving over to some indices now, and starting off with the NASDAQ 100, or the US Tech 100 as it's labeled on the IG platform. Previously, we talked about this green line crossing the blue line, which is our 50-day simple moving average, crossing above that 200-day simple moving average. That is considered a golden cross in technical analysis terms, suggested to be a bullish indication for markets. And we'll say through what's been happening over the last little bit, the tech sector has shown some resilience. And so we definitely do have a bit of a line in the sand. We seem to have reversed quite nicely off of that level. And we can find short-term targets at 12,475, and through that, maybe even 12,700 in the near term. Traders who are long might consider having a stop below this low here at about 11,665. Now, if we do start trading below that, then we can consider, well, maybe we're a little bit too early on this longer term uptrend that the golden cross does assume. But for now, there is a bit of a short term momentum to the upside, and we do have that longer term trend bias considered up on the NASDAQ 100. US Tech is in a short-term consolidation. Now, we still have that 50-day simple moving average above that 200-day simple moving average. But certainly, when we see the price starting to whipsaw that, we can argue that rather than an uptrend, maybe we're moving into more of a medium to longer term consolidation or sideways range-bound type environment, in which case you're looking to trade between the levels. In the short term traders will be focusing on this little trading range. We've got highlighted with that gray box, sitting between 3,855 as support and 3,920. We're trading in the middle of that range right now, so there's not a clear directional bias in the very short term. We want to see a break of either support or resistance for that next move up. A break above resistance, which we'd consider a close above on the daily chart, 3,920. Then we can start targeting a move back up to 4,050 to 4,080 on the upside. In that scenario, we'd use the lower end of this range at 3,855 as a stop loss consideration for a trade. Alternatively, a downside break, a close below 3,850, we start targeting the next level of support there at 3,760. Wall Street cash, Dow Jones Industrial. We have had this short to medium term range for quite some time. We had the price whipsawing through as moving averages, another indication there. The price wasn't making higher highs or lows, it was moving sideways, and we identified that range. Previously, we looked at this range trade with our conservative target in the middle of that range, 33,530. That worked out quite well. But since then, we've seen the price collapsing, breaking support, and now arguing a very short-term consolidation. Now, we are back below that 200-day simple moving average as well. I don't think that means that we're in a downtrend longer term on that, but it does mean that that uptrend has been broken. So we could be broadening the range, that longer term range right now. And we do have a bit of a short to medium term, some daylight between the price and the 20 and 50-day simple moving average, suggesting the short to medium term downside bias right now. Next level of support to consider, sitting at about 30,980. For renewed gains, for some positivity, and to start considering the long side, you'd want to see at least a break out of the short-term range and above that 32,190 mark before starting to target a move back towards 33,530. Another just a point of interest here is that when we start seeing these long wicks on the lower candles, they're showing some price rejection and some appetite for some buying coming back into the market on Wall Street. But for conviction on the upside, we want to see that close above that 32,190 level first before targeting that next level at 33,530. The DAX 40, we have seen a trend line break, and we are starting to, we did reach our initial target there of 15,715, really just a touch of that. But since then, we've had a pullback, we've had a break of trend line support, and we have been ticking lower. Now, our preference, we still think that longer term trend is up, and we are waiting for a bullish reversal for long entry. Now that we've broken this 14,960 mark, we are looking for that reversal closer towards that 14,605 mark. We are still quite far above that 200-day simple moving average, and we haven't actually traded below what I think is a major low here. Some confluence between a major low, sitting about 13,840 odd, and about 14,000, somewhere between this 200-day simple moving average and a horizontal line, which we draw on our page right here. So until we start breaking below those lows, we are still cautiously optimistic on the DAX 40 right now, but we are waiting for a bullish reversal at one of our levels before looking for long entry. Now, looking at the FTSE, that picture is not quite as attractive as what we've seen here, because we have seen this major low being tested in this recent downside, and we have seen a break of that 200-day simple moving average. That being said, we are oversold at this point in time, so some conflicting signals there. But we have the 20 below the 50-day simple moving average, the red line crossing below the green line, saying that the short to medium term trend is actually down. So we've got an overbought signal suggesting a bit of a rebound from oversold territory. We've had a break of that 200-day simple moving average, and we've had a bearish cross of the 20 and 50-day simple moving average. So Quite a difficult one to assume, but it does look like we could get a bit of a rebound here from that oversold territory. I think to commit to a rebound, you want to see that take at least above that halfway mark of this red candle at about 7,500. And in that situation, maybe targeting a move back up to about 7,700. And you can use maybe a reversal low there as a stop loss indication. But certainly, that hasn't confirmed yet. We need to see some strength and some proper rebound, and strong enough to raise more than half of the previous day's losses in today's session. Moving over to commodities and looking at Brent crude. For a while, we've been talking about the longer term trend being down in Brent crude and giving a short bias to trades because of that. Before we are looking at any long considerations, we've been watching this 88.70 level. We need to break above that before we can start considering the merits of long positioning in the crude or the oil market at this point in time. We've had a reversal over the last little bit before continued downside. What's happened now is where we consider the short to medium term trend sideways and the longer term trend down, we can now say that the short to medium term trend is also down and aligning with that longer term trend, which is obviously down as well. Oversold at this point in time. So our preference here is to wait for a rebound from oversold territory, looking for that rebound to end with a bearish candlestick pattern, bearish engulfing, bearish harami, dark cloud, anything like that. And now before that 79.50 mark, before targeting a retest of these lower levels, we do have a longer term downside target here sitting at the $69.50 per barrel, but we are not wanting to chase the market. If you are already short and if you caught that, then you could consider maybe having a stop loss on a close above a one-day high, depending on your threshold for risk. But I think new entries into the market now might be chasing a little bit as we start moving into oversold territory. Gold has started to show some safe haven appeal from this risk-off environment that we have seen in markets. We had this wedge that we've talked about previously. We had a breakout of that wedge. We took us past our initial target. We've had a nice pullback now, and now we are seeing a move back up and continuing those gains. So that longer-term trend we have been considering up. We're waiting for a breakout. We had that breakout. We've had a nice pullback, and now we are continuing gains. Now, above that 19, and we do have this gap here, sitting from about 1,865. And that does show you enthusiasm and effortless sort of move on the way up. So a bit of a breakaway gap, which is we consider positive in the market and now considered a level of support. A break above 1,905, which we have had, it's confirmed, does suggest 1,960 as a further upside target for the price of spot gold. I think if you are entering somewhere around about current levels, then you might want to have a relatively tight stop. Consider a tight stop at least somewhere below that 1,905 and a close below that. Last but not least, looking at iron ore. The trend for iron ore is still considered up, although in the longer term, although we are starting to consolidate again. So we've had a consolidation, we had a breakout, and now we've moved into another consolidation. Looked like we're breaking out, but now we're testing this $860 per metric ton. Now, while iron ore not the most heavily traded IG product by retail traders, but it is really relevant if you are trading diversified miners. Really is accretive to earnings when the price is rising, and obviously negative for a lot of these diversified miners when it is falling. So definitely something to watch here, certainly as even a barometer for underlying markets, especially those diversified resources. We are range bound in nature. We are testing this $860 per metric ton. It's the price of Dalian, by the way. If we do close below that, then we start looking at a move towards that $820 per metric ton. All right, that's all the charts from me. I'm Sean Murison, Senior Market Analyst at IG South Africa. And do watch out for the ECB meeting later today.